Hi everyone, and welcome back to my channel. Today we're going to talk about stockbrokers and crypto exchanges for Europeans. Because of the current Bitcoin bull market and the last stock bull market, many people have started to getting close to this world of investing, but they still don't know exactly where to start, which platform to use to start buying this kind of products. So I wanted to make this video to kind of show for beginners platforms that are in Europe regulated, easy to use, and that contain all the products that you need or that you need to buy. So we will look at five macro attributes for a platform. First of all is safety. We want a platform that is regulated, that is controlled by some financial regulated association that where you can put your money and feel safe. Because before investing in stocks and crypto that are risky asset, you have to invest in a platform that cannot be risky. Second, we will look at fees, so trading and non-trading fees. We want platforms that don't have high fees. We will look at the products that this platform offer, the taxes, that boring stuff, yes, but it's something that we need to consider when we do our tax declaration. And of course, the user interface, which is what made like very big some kind of particular brokers last year. So let's start with safety. As we say, safety first. The most important thing to look at is that the broker is always kind of regulated by a financial authority. So financial authorities, for example, like the FCA in the UK, are basically entities that have the role to protect consumers and allow healthy promotion, allow healthy competition between financial service providers. So basically, the entities are third-party entities that are behind this kind of brokers, and they tell you, look, this is a safe broker because it's under my regulation. So it's something that in case the broker goes default, you know that this entity will take over and allow the creditor to recover part of his funds. So other than the FA, we need some kind of financial compensation scheme. So this is FCSC. And this is basically an insurance that allows you to recover asset in case of the broker gets default. So this is something that rarely happened in the past, and would rarely happen. Very likely will not happen to you. But when you want to invest in something that is safe. So you want to know that in the worst case scenario, if something happens, your money are safe. And you have to look if the broker has this kind of compensation scheme to recover part of, not all of your money. So each broker have different kind of level of this financial scheme that covers either asset or liquidity that are inside the broker. And third, one of the most important thing is the years of operation. So it's not as important on the first two, but if you want to invest long term, you want also a broker that has been here for the long term. So at least 2 to 3 years should be good. If the broker was just started to trade, maybe it wouldn't be the best option for a beginner. Second thing to look at are fees. So there are two types of fees. There are the trading fees that are related to the product or to the exchange where you buy a product, or to the conversion fees because you are trading in euro but you buy asset in USD. And then we have non-trading fees that are basically fees related to deposit or withdrawal of money, or other hidden fees like inactivity fees or overnight fees. So this kind of hidden fees, I would say, that sometimes can erode your profit. So we will look at both of these for each platform, and we will say which probably has the lowest and which one has the highest. Also, we have to consider that some platform has a kind of something called variable spread. So a spread is basically the difference between the buy and sell of a product, and it depends on the exchange sometimes, but also depends on the broker itself. So for example, there are platforms that have fixed spread, so like there is a percentage of fixed spread for every product, and there are platforms that have variable spread. So for example, for an asset you will pay a 5% spread, while for another asset you will pay 1% spread. So this you have to look at when you see that a platform has no fees. It might mean that it has variable high spread, so you have to be careful of this. Third thing we have to look, it's the product. So at the end of the day, what we want to do is to buy some kind of assets because we want to invest. So we want to buy stocks or commodities or crypto or ETFs, whatever. The most important thing is to know if the platform we want to use has all the products that we want. We want only crypto, then we have to look at a platform that has at least has crypto and doesn't have only stocks. And the same thing applies at the opposite way. So products are stocks, commodities like gold, silver, coffee. Then we have ETFs that are emitted by some big companies like iShares, Vanguard, probably you know BlackRock, Fidelity. Then we have exchanges. This is very important as a product because the same company can be listed in different exchanges, and this can be very helpful if you want to diversify, for example, your geographic exchange exposure. For example, you don't want to have all your money in the Nasdaq because you feel that probably in the future some of these companies might be delisted, like Chinese companies, so you buy some of these companies at the Hong Kong Stock Exchange or the London Stock Exchange. Same things apply, for example, if you want to buy instead like companies that are, I don't know, in Australia or in India, you want to look if your broker has exchanges of those countries. And I would tell you, this is something that many people don't look at, and then they complain that they don't find that kind of asset in their portfolio. Of course, if you want to buy an Indian company, most of European broker will not give you European Indian exchanges because it's not a product that many European wants. So you have to look for some kind of broker that give you that kind of opportunity and not just jump directly into one broker. And then we have crypto, which is kind of a revolution recently with the recent bull market run. And also here it depends on some stockbrokers offer also crypto, but you will have here to look more at the crypto exchanges than stockbroker exchanges. Fourth thing is taxes. This is very boring and annoying, I know, but many exchange might apply to you withholding dividend tax. So when you get dividends from some companies, if these companies are not companies that reside in your own country, you will get like kind of a withholding tax. So at the moment you receive the dividend will be already taxed by a certain percentage, depend on the country from which this dividend were emitted. And of course, these taxes vary by country to country. So we know that, for example, US apply to Europe 15% withholding tax. But it's not the same when you talk about, for example, Ireland to Italy, or for example, India to Europe, which has like 0% withholding tax. So you have to see where you are resident and which companies you have bought to calculate this. Second, we have the capital gain tax, which is something that you pay at the moment of making a gain on a particular asset. So you buy low, sell high, you make a gain, you have to pay a tax there. And some broker might apply this tax already at the moment of the selling order. This is very rare, I would say. Not many brokers do this because usually if you kind of do short-term trades, this can lead to an avalanche of erosion of your profit. If you imagine buy and sell every month, and every month you have a 20 or 30% tax on your profit, this 20-30% you cannot invest anymore because you are taxed. And at the end of the 12 months, you have to consider that this can be a kind of a big chunk of the profit that you could have made at the end of the year. So I would say if you are a short-term trade, would be better to avoid this kind of brokers that apply already the capital tax gain. This is something it would be better to pay the year after in your tax return. And of course, to do your tax return, you need a tax report. So this is very important that your broker provide you this, broker or crypto exchange, because if you don't have a tax report with how much you bought, how much you sold, how much gain you have made, and how much tax you already paid, you will have to go through the history of the whole precedent year and check one by one at what did you sell, for which price, what did you buy, at what price. And if you bought something at a different currency of your own, you will have to check also the conversion at the day of buy and the day of sell. So you see that it can become really complicated. Even for like 2 or 3 trades, it's already kind of messy. So this is very important to have. Fifth and last thing we will look at is user interface. So you want to avoid some kind of platform that have a very complicated user interface. In the long term, when you will invest more, you will see that probably these are better interfaces for you because they provide you with much more details, much more information, much more tools to do some kind of technical analysis. But at the end of the day, you want to open your broker in your app, look for a stock, check the current market price, buy and sell, and that's it. And you want to see this directly in a kind of a dashboard review. And this is kind of something that for a beginner is much more important, to have like kind of an overview, very fast, very complete, of what you want and what you need. So what are the three most known broker in Europe, three most used broker, and what are their characteristics among these 5 attributes, and which one you should choose? So we have here DEGIRO, eToro, and Trading212. Probably you know already these three, but you don't know very well probably what's their best attribute and what are the weak points. So if you talk about safety, DEGIRO is a regulated Dutch broker. It's regulated by the Dutch Central Bank and the AFM. It has a financial scheme that covers up to 20,000 euro of your asset and 100,000 euro of your liquidity. And it operates since 2013, so it's kind of very, very safe. It's one of the most famous European broker, and many people trust this broker. So I would say with DEGIRO, you're always in safe hands. It has one of the lowest trading fees in Europe, 50 cents only to buy US stocks in US exchanges. But if you want to buy stocks in European exchanges or like in other exchanges, the trading fee can go quite high. I tried once to buy a stock in Australia. It was a gold mining company, and every order was €7.50. So you have to look at this before trying to buy. There is no withdrawal fee, no deposit fee, and there is no inactivity fee. So this is pretty good. It offers stocks, commodities, ETF, future bonds, options. There are many market exchanges, so Hong Kong, London, US, Australia, as I said, and it provides you one ETF free per month. So every month you have one ETF in which you don't have to pay any fee to buy it. The only downside of the offering is that it doesn't offer fractional shares. So you cannot, fractional shares as basically, it's a kind of it gives you the opportunity to buy a stock at a fraction of what it is. So for example, for some people at the beginning it might be very hard to buy a stock of Amazon because it's $3,200, or it might be very difficult to buy Lint because it's very high, or a stock of Berkshire Hathaway that it's traded at the moment at $300,000, I think. So then you say, like, how the hell do I invest in something like this? Well, fractional shares allows you to buy a piece of the stock, so 0.10001. So it gives you the opportunity to invest on those companies by not owning the whole amount of the stocks. So, and this can also be very good, for example, if you want to invest a fixed amount every month, for example, €500 or €1,000 every month, instead of being fixed to buy a certain number of shares. For example, let's say you want to buy every month €500 of a certain stock that is traded as €150. Well, €500 divided on 150, it gives you the opportunity to buy only 3 full stocks. So this means that every month you will have to decide if you buy 3 stocks and leave €50 aside, or buy 4 stocks and next month pay €100 less. So this fractional share, you see, allows you to spend every month €500 and get 3.3 basically stocks of €150 stock. If we look at this example, if we look at taxes, we have the withholding tax that applies on dividend. We don't have capital gain tax. This is very good. And we have a tax report that you get every year. The interface, both in the mobile and the web platform, is very cumbersome actually, but it's very complete. You will have trading analyzing options, every chart you need of every kind of exchange, a lot of information about the financials of every company. It's just that for a beginner might be not so easy to navigate through this. One thing to say about DEGIRO is that if you are a resident of a particular country, but you are not from that country, your nationality is different, and you don't speak yet very well the language of that country, this might be a problem for you. Because let's say that you are French and you live in Spain, and you want to open a DEGIRO account in Spain, but you don't speak Spanish. The problem is that DEGIRO can allow you only to open an account in Spanish. So for you that you are French, it might be very complicated to understand exactly what are some of the things written in the account. Buying and selling, it's pretty easy, but if you want to read financial, if you want to check some kind of information that might be very important, you can lose some kind of transparency on this. So this is something that Giro didn't fix yet by allowing you to switch the language in your account, but I guess it's something that they will fix in the future. Recently, the Giro was kind of bought by Flatex, which is a German company, so they are in the process of like doing this kind of merge. So in the future, probably there will be some kind of additional news to add to the Giro in terms of regulation. This will just be something better for German residents at the moment. Second stock exchange to look at, second stock broker to look at, is eToro. eToro is a British stock exchange. It's regulated by the FCA, which is like a financial regulator in the UK. As for the Giro, it covers up to 20,000 euro in your asset and 100,000 euro in your liquidity, and it operates as well as the Giro since 2013. eToro in this case has spread and no fees, so the fees are zero, but you have variable spread, so you have to be very careful when you buy a particular asset if the spread is high or low. There are no withdrawal fees, and there is only one inactivity fee of $10. So this is very important because if you don't log in the next 12 months, the Giro will detract $10 from your account. Now, if you don't have any liquidity in your account, the Giro might close a position that you have open to take this $10. So be very careful. If you have something long term that you don't like to look at it because you want to keep it there 20 years, but it's a very huge amount of money, you have to consider that the eToro might just close the position to get those $10. So either keep some kind of free liquidity on it or just log in once in a while to check your position. It doesn't have a very high amount of stocks, we have to say. The basket of option is not very big. There are not many Chinese companies. There are not many penny stocks or very small cap stocks. It's mainly for like kind of big well-known companies, but there are also commodities, ETF, and one more important thing is that it offers also some kind of some crypto. So you have Bitcoin, Ethereum, Litecoin, some of the major one, XRP, Cardano. Some of them are also wallets, so you can transfer the coins to your private wallet, but some of them don't. Like for example, Cardano doesn't have a wallet, so the coins that you buy are not really your coins. It offers fractional shares, so you can buy just a fraction of a company in this case. So this is pretty good. I would say, yeah, this is the whole amount of products that they offer. They have ETF, we said that, yes. Regarding taxes, it's same as the Giro. There is no withholding tax on dividends. There is no there is withholding tax on dividend. There is no capital gain tax, and there is a tax report that you get at the end of every year. I think the main strength of eToro lies on the fact that it's a social platform. So it's kind of a social network where you interact with other people to talk about stocks. You can comment under every possible stock and interact with other people. It gives you the opportunity to do copy trading, so this is kind of very new. It's also the reason why eToro became so famous. So instead of like investing by yourself, you can just put the money in the hands of other people that will invest it for you by basically copying them. It gives you the opportunity to open a demo account where you can invest $100,000. So demo is like fake money. But this way, especially if you are completely new to this world and you don't want to risk one single euro, it's good to check your trading experience there, your trading information, your trading ability by simply opening this demo account that you can just then close and you can switch to the real account. So I would say for beginners, it's a very good platform. It's also easy to navigate both the app and the web platform. So this is something very good for beginners. The downside here is the limited option of stocks. The third one that we have here is Trading 212. Trading 212 is regulated as eToro by the FCA, is a British broker, operates in 2016 and has the same financial scheme, 20,000 for asset, 100,000 for liquidity. As well as eToro has no fees but has variable spread, is just tighter, and there is no other fee. So this is one of the best if we talk about fees. It has big basket of stocks and commodities and ETFs, no crypto, and also here there is fractional shares. There is withholding tax applied on dividends, no capital gain tax, and tax report every year. As well as for eToro, there is a demo account of $50,000, and the interface is very easy to use, and it kind of gives you the opportunity to create a kind of a pie so that you can graphically look at what are your position in each stock. So graphically, it's very nice, the dashboard. But also here, main key to take is that easy to use and very good for beginners and no fees. So at the end of the day, you have to choose what you're looking for. You're looking for something that has very amount of stocks, so that the possibility to buy from different exchanges, from different markets, or you want something very easy to use, easy to navigate, just to start looking at trading. Then if you are slightly more experienced, I would say I would go with DEGIRO, because it offers you much more options. And if you are just a beginner and you still have no idea where are you in this kind of world, I would go with eToro or Trading 212. Especially eToro might be better because the social platform allows you to see what other people think of other stocks, and you can kind of learn also by copy trading. The second thing we will talk about is crypto exchanges. So what are the crypto exchanges you would like to have to start trading crypto? As we can see here, we have again eToro, because as we said before, eToro, it's a platform that allows you to buy also crypto. So here we have again eToro. As we said, it has very few crypto and doesn't have many wallets, has variable spread, and it's very user friendly. One thing you have to know about crypto is that it's not regulated. So when you lose money, it's on you. There is no financial scheme that allows you to recover those money if are lost. So if somebody hacks the account, the money are gone. There is nothing else you can do to recover them. That's why, for example, Coinbase and Binance are trying to kind of give some kind of protection. For example, Coinbase store 98% of their coins offline, so in cold wallets, while only 2% is in actually in online exchanges for available for trading. So this means that your coins are kind of very safe, but at the same time you have to the safety of Coinbase is given purely on trust. So on the trust that the platform will not disappear tomorrow, because it's US regulated, yes, but it's not really regulated by a financial authority in Europe, and tomorrow can be gone and your money could be gone with it. So be very careful here. Has two-way factor authentication as well as Binance. Binance had in the past some kind of hacking attack, which people lost their crypto. So it's kind of a more risky world compared to a stockbroker. But if you want to buy crypto and just transfer it to your wallet, maybe Coinbase and Binance are both a very good idea. Coinbase unfortunately have very high fee when you buy with credit card, a bit lower when you buy with cash through a SEPA transfer. Binance has one of the lowest fee in the crypto world, 0.1%. And offers a very big catalog of crypto, while Coinbase doesn't offer many crypto. Of course, most of them are in the top 100, but most of the small cap crypto are not there. They both don't offer a tax report for Europeans, but only for US customers, and they're both, I would say, very friendly platform to navigate both on web and mobile. Probably Coinbase much easier to navigate. So also here, you want safety, then I would say go with one of these three exchanges, but transfer your crypto to a cold wallet, to your personal hot wallet. Don't keep the money in these exchanges. You want to just buy and sell, then maybe Binance is the cheapest option to buy and sell because of their low fees. And if you're just a beginner and you don't know how to what to really buy, where to or how to trade, then I would say go with eToro, open a demo account, and trade crypto and socialize in the platform with the other users. So this is my take on crypto exchanges, but I would like to add two honorable mentions. One of them is Trade Republic, which is a stock exchange, stockbroker. And this is very good if you are resident in Germany or Austria, because Trade Republic makes your tax declaration really easy, because at the moment of selling your your stock, Trade Republic already applied the capital tax gain. So at the end of the year, you already have a kind of a tax report with all the taxes you paid, and Trade Republic substitutes you as in your tax declaration already pays all the taxes to the German government by giving you at the end just a simple number that you have to add in your tax declaration. So this is very easy, this is very good and makes life very, very easy for Germans and Austrians. They don't want to deal with tax declaration too much. Unfortunately, it's only available for German and Austrian resident. I don't know if they will be available in the future for other countries. Probably I will do a video about that if that's gonna happen. And regarding the platform, it's also no fees, it's with spread, and it's very similar to Trading 212 and eToro, so very easy to navigate, very simple. Bitpanda instead it's an Austrian exchange with low fees for crypto, so this is a good variant, good kind of crypto exchange in case you don't want one of a US or a British exchange and you want, for example, pure European exchange. Then I would say Bitpanda, it's a very good option, very low fees, very good track record also here. But remember, as we said before, a crypto exchange is not regulated, and if you lose your crypto, you lose your money forever. So just be careful here. With that said, I would say it's everything for this video. I hope I gave you a kind of a hint of what is really the platform on which you should go as a beginner, either for stock or for ETF or for crypto, and that this makes it easier for you to understand that at the beginning this world can be scary, but the more you deal with this, the more you find out that it's all about knowledge, it's all about knowing what you're doing, and it's all about making gains. So see you at the next video, guys.